I think the number of speakers are up here this morning, and we certainly talk a lot about China and its economy and the stock market. Obviously, I'm one of the participants. Actually, we have a significant investment in China, for many years. And I think for most of us in Asia, particularly I think in Korea and Southeast Asia, we have been through many crises. And if you learn from one of the lesson learned from the crisis, 1997 was a very difficult year. I was in fact in Indonesia, Jakarta, when the day the city was partly burned down, and you learn that things will always come back. 1997 crisis was a difficult one, but it is a lesson learned for all of us. And if you are long-term investors, able to look at things, I think on a very fundamental basis, then you will end up, making very good investments in the long term. I think if you put your money, in 1997, and same as 2008, when the Lehman crisis happened, the global financial crisis, and in many ways, China was shielded on both the crises, and this is the first time a major sort of economic, turmoil that happened. But again, long term, I think if we are long-term investors, fundamentals remain the main thing, and that would be something that I would urge people to look at as they continue to look at investments in the entire Asia. With that, before I start, actually, I managed to ask someone here, ask what news, I understand the news part, what is PIM stands for. So finally told me it's people in market. So I would like to add, actually, NewsPIM is people in market and people in motion. I'd like to congratulate Mr. Mim for actually moving the company. It's one of the most, I heard, fastest growing company, certainly in the media information technology area. Which leads me to my official, I would say, presentation. The overseas investment by Asian companies actually has happened for many, many years. If you roll back, historically, it's always been investments from offshore into Asia. In the 1600s, when the British, the Europeans actually came and eventually invested and actually, in many ways, ran a lot of the countries in Asia. They were trading companies. They were actually trying to get spices, food, etc., silk from Asia and transfer it back to Europe. And that was I call it the earliest form of effectively trading and overseas acquisition by the companies such as British India. The Dutch were in Indonesia, the British were in Hong Kong, in Malaysia, in Singapore, etc. So we saw that, but the modern, I call it, investments into Asia first started probably in the 1960s, 1970s, as the global multinationals such as General Electric, you have Boeing, Procter & Gamble, a lot of Danone, all this food, healthcare, consumer white goods company decided to expand and gain market access into Asia. And that actually, you see a lot of information technology, telecoms company as well, investing in Korea, in China, and the rest of Southeast Asia. So we saw that wave of, I call it, inbound capital happen in the 60s, 70s. But then came the 90s and the early 2001 when China entered WTO. That was a significant event as China became part of the global trade partners. With that, I think we also saw the outbound investment, the overseas investment. Japan, many of the Japanese companies went and invested in the US, and a lot of them actually, lost a lot of money because they went to, real estate, etc. During the real estate bubble in the US. But having said that, some of the big global multinationals from Korea, from Japan, and went on and established very good acquisitions, investments. When I recently went to a small town in Kansas, I could see people from, in fact, from Samsung was there in a small town of less than 1,000 people, and they were actually going out there. So that's part of the I call it expansion into market access. And China came about in the 2000, starting from 2000, when capital markets opened up, companies had capital, and they were big enough, and that started the first offshore acquisition by, I call it, Chinese companies. And naturally, the first wave of investments were done by the state-owned enterprise. A lot of the SOEs in the natural resources sector, in the oil, the energy sector, companies like PetroChina, CNOOC went out and acquire companies in different parts of Asia, in different parts of and Africa, Latin America, etc. And that first wave was led, then followed by the, given that China became as part of WTO and became the I call it the marginal demand for natural resources coming from zinc, iron ore, gold, etc. Therefore, the demand supply was out of whack, and commodity prices went up, and China SOEs, companies like Chinalco spending $14 billion buying 10% stake in Rio Tinto. You find that Minmetals, and many other companies, natural resources, investing in mining companies in Australia, in Africa again, and Latin America. So that's the second wave of companies again getting reserve supply that they need in their view for the long term. And more recently, times have changed. The role of the, I call it POEs, or privately owned companies, has played a bigger role. You find that group companies such as Wanda are going out. More recently, HNA, which is Hainan Airlines, just bought a $7 billion aircraft leasing company in Europe last week. So there is a next transformation change, which is really a POE-led, and then also some of the SOE are focused on also acquiring like Brai Foods and Cofco, going out to buy food and food-related companies around the world. Now with that, if you look at it, China effectively has spent probably over $100 billion in the last 10 years acquiring companies offshore. And naturally, as someone would take a seat, take a back, and then really look at all these acquisitions, whether it makes sense, whether it's value creation, and whether how you manage, what are the pitfalls in making acquisitions. As we know, Korea companies have a longer history of expanding offshore. I think they've done it quite successfully in general by first going out and really opening up plants and before they make acquisitions. China, I think because of the significant amount of domestic market that they have, acquisition or mergers and acquisition, it's part of a daily business life because to gain technology, to gain market access, meaning distribution channel, also effectively to expand market share globally. Some of these companies have taken a bigger leap forward with M&A. Now, if you look at the data out there, not every M&A turned out to be successful, and that's just, I call it a tuition. Any company, any countries that gone through this change, effectively have to pay a tuition. You make some gains, you make some losses, but you also have to learn from your experience. China, unfortunately, the state-owned enterprise, which has been the primary mover, usually takes a long time to make any acquisition because of the regulatory process that's involved, involving with SASAC, involving the Ministry of Foreign Affairs and different ministries' approval. So therefore, their lead time tend to be a lot longer compared to other companies around the world. It is a challenge because part of the problem with overseas acquisition for Asian companies, and particularly for Chinese company, is as you move on to a big acquisition, they tend to spend a lot of time in the due diligence process. I call it the pre-acquisition. So a lot of companies spend months and spend billions of dollars working on the acquisition. But the issue I always find, and I sit on the boards of a couple of American companies and European companies now, the issue has always been, it's easy to acquire a company, but it's very hard to run a company after that. The cultural differences, the legal, the financial, the operational challenges post acquisition is the real issue. How to manage this company? You can't manage this company either from Shanghai or from Beijing at the end of the day. So oftentimes, in an acquisition, the unfortunate part about Asian companies when they buy a company offshore is typically post acquisition they have to obviously send management to these companies. And one of the lessons I think learned is they typically do not send people who are very senior to these companies. And I can understand that because most of the senior management will prefer to be in the headquarters. You don't want to be very far away from I call it the power base. So therefore, the people you send is very critical as part of any acquisition, because they have to be seen as someone who can be a decision maker, someone who is senior enough, that ability to coordinate and to manage these companies post-acquisition, and not waiting for decision making to come back to Beijing or Shanghai to manage them. So, and the other point I will make is, unlike other companies, if you look at GE, which is I would say one of the best acquisition global multinational who acquired companies successfully, they oftentimes send one of the most senior people to the companies they acquire. And the reason for that is because they have a culture and KPIs that basically make sure that every CEO of GE or any senior manager of GE has to have overseas posting to become a CEO. That is a requirement for a global multinational. So as China become more and more, I call it the companies become more and more global multinationals, and some of them are becoming one, they have to come up with different kind of KPIs in order to encourage senior management to be incentivize them to actually go offshore, work in those companies and come back. And when they come back, they will have a senior position within the corporation, because if you don't, then no one good wants to go offshore to manage those operations. And that would actually typically is one reason why acquisitions fail. You don't want to be spending billions of dollars and then sending someone who's not very capable at the end of the day to manage the operation. So that's one of the big issues that we always face in Asia when we make any of those investments offshore. Another point I will make is oftentimes it's like children when you learn how to crawl, walk before you run, and in many cases I think acquiring majority is that something that absolutely a must. If I have a choice, I would say I would advise many companies take a minority stake, but a significant minority with the path to control. Now you can buy 30% on day one, work with the overseas partners, and over time, but with the option to acquire control later on, because you really need to understand the way foreign companies operate are quite different from your domestic market. And learning how they work, they are compensated very differently. I sit on the board in American companies where the effectively you can be you'll be on the board, and the compensation is going to be significantly higher than the people at the headquarters, and that's how they run the companies. They're very different incentive system in place, but in order to make it work, you have to make sure that you're competitive at the end of the day. So I would say that the overall this overseas investment by Asian companies, by Chinese companies, is not going to stop. I think it's just the beginning, and the more successful I think so far is done by some of the privately owned companies. You find companies like Alibaba now, and or Tencent going out, started to make bigger acquisition offshore. Wanda, making again, acquiring some of the more on the lifestyle entertainment industry as well. So you will see that changes, as they continue to be globalized, their management will change as well. In other words, whether their management become more global at the end of the day. But ultimately, I think the key to all this is all about empowerment. You need to empower your senior management to make the right decisions after the acquisitions. We have seen, naturally many investments that didn't go well, but I think that shouldn't deter. I think many other companies, when you look at markets, technology, one of the big changes in this world obviously is technology, and with technology, I think you can improve a lot more. We recently I was with the chairman of Shuanghui, which is the largest pork packaging company. We just acquired a $7 billion pork company in the U.S., the largest, called Smithfield, and all these integration issues become a real challenges for the management, and over time I think whether one's successful or not, it depends on how you structured the overall organization to meet the challenges of the new world. We'll see China will continue to open up. To me, the recent market turbulence is a good thing as well. Like many of my participants, the speakers just now said, and I always see China as, every time China hits a turbulence or a turmoil, they reform very quickly, and that is an opportunity for many of us looking, in China, in inbound and outbound. I certainly hope that in many ways some of the companies, for example, in Korea and China, could cooperate to work on some of the even the overseas acquisition, because both have different skill sets, both have different markets, and both have different values and to bring to the table to make such investment work, because the world is big enough for everyone, and China is a huge domestic market. Korea obviously is way ahead in terms of the technology, on the management, as we talked about some of the sectors like environmental sectors, healthcare sectors. You think about China alone, there will be about 350 million people. Above 65 years old by 2020. So the aging population in China, the demographics change in China. So that all creates opportunity, but they don't have the technology even to do a lot of the nursing care and healthcare, and the government can't take care of them. So overall, you're going to have a private sector solution. But to do that, they may acquire companies offshore in order to learn the technology, etc. So again, I'm going to keep my speech short. I'm happy to answer any questions. I'm a practitioner, so I'm an investor. So I've been riding the roller coaster of the A-share up and down, as speakers have spoken. But the good news is about life, I always say there's a greed and fear. So as long as you focus on the fundamental, you will find this equilibrium, and you will find this equilibrium very fast. But I don't fear the markets, and I think what we need to do is just be very calm in terms of taking in terms of looking at companies that do well. We have investments in Europe, in States, in Asia, and we find them at the end that they are all about the same. In terms of really looking at fundamentals, because I always believe in the law of gravity. What comes up when an asset trade at 100 times price to earning, it's not sustainable. It will come down. With that, I will, again thank Mr. Min for inviting me. I'm quite happy to take any questions, Q&A, if anyone have any questions. I've been to Korea since 1987. I've loved this country. I've been to Ulsan, Pyeongtaek. I've been to every little small cities, looking at some of the great companies here, how they industrialize and how they built, these mega ships as well. Down in Ulsan, for example, when the Hyundai factory is. Yeah. With that, again, thank you very much, and I hope this is been a great conference. Thank you.